hear some good news, Tim. You got good news?
Tim.
Well, I was going to start out with something a little negative.
Oh,
but it'll straighten right out. We don't have to go too deep into this. Everybody knows that this stuff.
What the hell's going on with this ETF bummer?
Because the this is about the ETH ETF.
ETH.
Right. They're holding off on that one. They're still everyone's bracing for denial. I'll skip down to the part where this guy says, "I'm aware it's widely considered a possibility, but this is your official notice that the SEC is considering the security question for ETH in this upcoming spot ETF." Oh, what happened? My thing disappeared. There we go. ETH in this upcoming spot ETF order. Note that the question was never asking regarding a spot futures BTC ETF. So they didn't call it a security. Bitcoin was never had this much scrutiny because they weren't considered. That wasn't considered a security. Bitcoin wasn't. So, but ETH is. So that's what the delay is. So don't expect that coming anytime soon. That's what this one is.
So my question to you, Tim,
yeah.
Is it a commodity? Is it a security? What's your opinion and why?
I think that it's not a security. It's a commodity. And it's more of a commodity. It's kind of a hybrid kind of thing. But it's not a security because it does not guarantee returns. It's not expected returns coming out of owning ETH. So are there ways to get returns out of it? Yes, but it's not like a security where people open up a business and issue securities and say, oh, we're doing our best to get our investors return on their money. Right. So that's why
security, absolutely.
Except for those things like the Athena. That's why we can't have those in the United States where you're staking it and it says you're going to get what was it, like a 28% return on some stable token, right? That's a whole different ballgame. Yeah.
Right.
Thank you for that.
Mm-hmm.
Do you have better news, Tim?
A little bit. Well, this one is a quick picture about gold. Right, we've been watching gold go up, and it went from 2013. It went from 12,000 to 13,000. 2 bars of gold. What happened with digital gold? Our favorite digital gold, 100 Bitcoin.
Love it.
Went from 12,000 to 6 million.
And this is what I want to ask again to my friends, anybody who listens to me. If I had a time machine, I'd go back to 2010. And I'd find some friends that knew anything about Bitcoin, and they would be my best friends.
Well, you don't really need a time machine because look what we got going here. So first off, I stole all this stuff from Raul, who had a big talk recently, and so I was screenshotting all this stuff. So all this comes
borrowed.
Right, all this stuff comes from him. No, I'm giving him credit. So
okay.
He doesn't know I took it, so I'm gonna say stole it. But anyway, I'm saying it.
Baby.
This is here it is, first one.
Right.
This is the total liquidity index for the worldwide, right? And these color codings is spring, summer, fall, and winter, right? And this is every year. This is based on the halving, right? So where were the halvings were just before summer, right? So it's 16 and 2020. Right. And then, liquidity just went crazy. Right. This is liquidity here is because they were pumping money into the market. Right. They were just giving money away. But this is the way liquidity is working. And as you can see, 2024, we just had the halving. And so liquidity rises in the summer and the fall. So we're expecting that liquidity.
Ray.
Why is this important?
That's a sexy graph right there. Talk to me.
Well, it gets better. So here. Yeah, this is tracking the Bitcoin in the same kind of chart, right? Spring, summer, fall, and winter, right?
Yeah.
We just got through this winter, right? Blue in 2022, 2023, and so this dip here, but we're looking at summer and fall, and this is about to take off, right?
Oh, look!
And
it
always
to the left.
It always happens that way, and as you can see from these two, so if you're looking at gold and brown, Nice run ups here, nice run up here, nice run up here, and then we're looking for the same thing. Ooh. And he goes a little farther, and historically, you remember this one, Ray? You used to flash this one up all the time. You know, different assets. Mm-hmm. Digital assets have been the best performing assets over the last 11 of 14 years.
Are you sharing it?
Nope, but I am now.
There you go. Yes, that's right.
So you remember this one? So Bitcoin is first, obviously. Cumulative 20 million percent.
Shut up.
Annualized 139. So you don't need to. I mean, it'd be nice if you got in at 2011, but cumulative 20,000%. Ethereum 323, almost 324,000%.
Goodness.
Solana over 8,000%. The Nasdaq almost. This is over the 14 years, right? Since Bitcoin came out.
I mean, you keep on going down.
Gold's down here.
53.
Right, at 53.
And look at the one after that, below that.
Well, you got cash. And
that's right. Talk about it. Talk about it. That's ridiculous.
That's pathetic. And look at commodities.
The F word right there.
Yeah, no kidding.
Yep.
So,
and here's the kicker. You're saying that's what, 5%? But you lose 7.5% a year. So we would have lost 7.5% a year since 2011. So if you calculate that, that number's incorrect. That number's incorrect. The buying power is, if you take inflation into the account, that should be like minus 80.
Yeah, a lot of fun. So let's go back to the fun part, the good part. You ready?
Tell me.
This is it. This is where we win.
You're gonna make my day.
This is gonna make your day.
Be Clint Eastwood.
Uh-oh.
Boom.
Oh, come on.
This is Bitcoin. No, from 2011 to 12, this is halving, and then boom. 14, this is halving, and then boom. 19 and 20, and after the halving, boom.
Do you have a pencil?
This
is a pencil right now.
This is now. This is now, right? The halving happened. Where's it gonna go?
Do you have a pencil right
now?
Look
at the scales. Look at the scales. He has the scales done the same. This is from Raul again. He's got the scales done. So we're looking north of 250,000 if you've got a Bitcoin.
Let's go.
And if you don't have a Bitcoin, it's going to be much harder to get one.
Yeah.
Afterward.